Hi, this is Amir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 19th of December. Start over the FTSE 100, where it looks as though people are selling their shares to pay for Christmas presents or something like that. We've gone back down to the floor of that rising trend channel at now 1890, something which we didn't really want to see, but that's what's happened. And at least the idea now is that while we stay above 1890, this could be a buy the dip opportunity, as was the November dip. But an end-of-day close back below 1890, and we're looking at a potential test of the 8,000 level, which was the November support, and actually basically also was the August support as well. At this stage, only really, apart from the uptrend line there at 1890, only an end-of-day close back above the 200-day moving average, really getting this market out of jail, as it appears to be at the moment. RSI at 35, so not yet oversold, which does hint that we might need another leg down to 8,000 before we can revive ourselves. On to the DAX, which hitherto has been doing rather well in December, but even here has managed to catch the FTSE disease, and we've now actually got an island top, so gapping out earlier in the month and gapping down, which is not a great signal. That suggests that we're probably heading back down to the old October resistance, 19,700, and maybe as low as the 50-day moving average at 19,600. End of day close back above the gap there at 20,200 is required to delete the negative top that we've got there and take us back up to 20,800 on top of that rising trend channel from this time last year. The Dow has been amazing in the sense that we've had several consecutive down days, and obviously that's culminated in yesterday's 2.5% decline. In fact, from a charting perspective, it was interesting as well in the sense that we had the bull trap through the November peak there, so through 44,500, double top effectively, and then making a beeline for not only the 50-day line, the floor, the channel there at 43,200, but also the bottom of the gap there at 42,300. RSI now in the oversold territory, so although we might get an extra push down to 41,600 in the November floor, we're probably on guard now for a potential rebound, but obviously quite a dramatic fall, the most dramatic one we've had really since the beginning of August, but obviously that turned around rather quickly. This has been a fall off the back of many days of down days. Moving on to Bitcoin, and here we've got a situation where the rug has been somewhat pulled as well. We were factoring in that we might have to test recent support there at 98,000, which is basically that's been done, and we're back above 100,000. We've got another support level there from the uptrend line from last month, 97,200. So I suppose 97.98 covers it in terms of the downside. The next level up would be the old initial December resistance at 103,000. Then obviously the record there towards 108, but can't rule out a test of the 50-day line there at some point as a rug pull, especially if we mirror what we've seen in the equity markets. Moving on to gold, and here the picture continues to be rather soggy. We've got the floor of that rising trend channel from February around 26.30. That's what we're looking for this market to hit. Hopefully that will be the lowest that this market goes, but obviously we've had the double failure in the 2750 zone, and so there is the risk of a lower move, maybe towards that red support line projection from September in the 2520 area, but early days yet. Hopefully we'll just bounce off the floor of that channel. Moving on to the stocks, and starting off with one of yesterday's big stars, Active Energy, and here we've got a situation where we were looking yesterday for a fill of the earlier gap there at 0.37, didn't quite make it yesterday, the high 0.3, and still looking for this market to maybe spike up through to the 0.37 area. The upside valid at least while we're above the last gap there at 0.17, and the 200-day moving average almost at the same level there. So above 0.17, looking for as high as 0.37 as a best case scenario target on Active Energy. On to Ananda, which hasn't actually moved today, but we've got a situation where it looks very well poised within that rising trend channel. Top of the channel basically heading for the June peak there around 0.57, and we're looking for that while we're above the now rising 200-day moving average at 0.37. 50 and 200-day lines both rising, so probably about a week or two away from a golden cross, and the run up to a golden cross tends to be the strongest part in the cycle. Moving on to Guild Esports, and here, a company that's promised a lot for many years and so far hasn't delivered, but we've got a nice break of the 50-day line there at 0.038 after yesterday's very strong hammer candle. A bit of a cork and water rebound there, and that suggests that we'll have enough gas in the tank to get up to 0.063 and also fill that gap down from back in October, maybe as soon as the end of this month. But the key here is staying above that 50-day line on an end-of-day close basis. We haven't been above the 50-day line since back in August, so already the charting situation looking relatively strong and potentially a trend change there. We've also got bullish divergence, so lower lows for November and December, but higher RSI trace, so maybe somebody is finally looking at that stock in a positive way. Intelligent Ultrasound is next, and here, although the near-term chart just looks like a bit of a mess, you can see from the longer view that we've had the big turnaround. We had that in July, and since then, actually, higher highs, or at least higher lows, rather, for the shares, and generally rising 50-day moving average. 50 and 200-day lines have generally been rising, so that suggests that we're in the run-up to a decent move to the upside, perhaps as high as 17 pence by the end of next month. Ideally, we stay above the 200-day line at currently at 9.8 pence in the meantime. On to Mast, which is giving some signs of a turnaround. It's a extended rising trend channel base. Unfilled gap to the upside today, rising 50-day line, so above 0.14 on the floor of the channel. We're still looking for 0.24, maybe as soon as the end of next month, and we'll maybe see a rally like we saw in July, August for the rest of December, January. Moving on to Oxford Biodynamics, where I believe there's a fundraise in progress, £4 million fundraise. Here it's interesting that the 50-day line, a bit of a block on progress, but we have had a gap close buy signal, and at least while we're above the 1.2 pence area, looking for an ongoing recovery. Best case obviously would be a retest of the initial December resistance near 2 pence, but probably if you're cautious, you wait for at least an end of day close above that 50-day line at 1.32 before assuming the worst is over there. Moving on to Pipehawk, which I look at. I don't think anybody else looks at it, but I look at it, and here we've got the shares breaking the initial broadening triangle target there, which was around 2.3 pence, and above that we're looking for fresh leg to the upside towards the 200-day moving average and that resistance line projection there from the start of July. So that's looking at around the 4 pence level, and maybe we'll get that by the end of next month. Nice progression here, sideways shuffle above a rising 50-day moving average. You can literally see the step-by-step rises in the shares, and that is one of the strongest sort of turnaround signals that you can have. Only back below the recent support there, around 1.8 pence, or 1.9 pence rather, would delay the upside scenario. On to the last three. The first one is Sabien, which had a decent update today, and here you can see that the market liked it. We've got the 50-day moving average crossing down below a rising 200-day line, which is a bullish development. We also had an unfilled gap to the upside last month, so this is looking like it will be able to at least retest the March resistance at 16 pence, and maybe do that by the end of this month, obviously with the holidays in between. Only back below the gap there at 10p, really delaying the upside idea. On to Shoezone, which obviously was a big feature of earlier in the week with the rather disastrous announcement. But here we can see that there's a glimmer that we actually had an overshoot to the downside. We've broken above yesterday's high. That was around the 85 pence level, and above 85 pence, looking for potentially the shares to head back towards the old support for the year around £1.20, probably £1 to £1.10, the favoured area if we can, if we've not already seen the dead cat bounce level peak at a pound so far today. Finishing off with Serco, and that's on the basis that we've also had a overshoot to the downside, gapping up today And that comes after the gap down that we had earlier in the month. So it's a bear trap island reversal, and an end of day close above recent resistance £1.46 could be enough to get the shares at least back up to that gap there at £1.54. Best case, we're up to £1.65 in the top of that broadening triangle. That's it for me today. More updates tomorrow.